Good morning, everybody, and welcome to today's webinar. This is our first course in the auditing side, where most of you would have joined us on Wednesday already discussing Caseware, and then perhaps yesterday you joined us for the financial statements, but today we are really getting stuck into the probe audit methodology. So welcome to today's session. My name is Joanna Schreder, and I will be facilitating today's session. Before we get started, I want to hand over to Christian Stein, who is the product manager, and he wants to also just welcome you to today's session. So over to Christian.
Thanks, Joanna. Good morning to our fantastic new additions to the team. Welcome to each and every one of you from me, Christian Stein, the product manager for audit. Today marks an exciting chapter as we get started with the Getting Ahead series for Probe Audit, the first one in the audit series. It was meticulously crafted for you, our talented auditors, and I'm thrilled to see the interest in this course. And I can assure you that your journey with Caseware and Probe Audit is about to be nothing short of remarkable. As the manager of this incredible initiative, it brings me immense joy to witness the evolution and growth of our new Caseware users. The Get Ahead series is not just a training program, it's a dynamic platform designed to empower you, our future leaders in audit. Your contributions are vital to our collective success, and we commend you to provide the tools and knowledge necessary to excel. Caseware and Probe Audit have been carefully selected to serve as the backbone of this training series for a reason. These tools are not just industry standards, they represent innovation, efficiency, and precision. As junior auditors, you're about to embark on a journey that will sharpen your skills, expand your horizons, and undoubtedly elevate your careers to new heights. Throughout this series, you will delve into the intricacies of audit, explore the nuances of Caseware, and the training modules have been crafted to not only equip you with the technical proficiency needed, but also to foster a mindset of continuous improvement. We believe that learning is a lifelong journey, and in your time in the Get Ahead series, we'll stage you to fulfill an impactful career in audit. I encourage you to embrace this opportunity with open minds and a hunger for knowledge, and please don't be afraid to ask questions. Challenge any assumptions and engage with your peers. This is not just a training series, it's a community of learners, and each one of you plays a crucial part. As you navigate through the training, remember that mistakes are a natural part of the learning process, and the Get Ahead series is designed to be a safe space for experimentation and growth. So don't be afraid to step out of your comfort zone and push the boundaries, because that's where the real learning happens. In closing, I want to express my genuine excitement for what lies ahead. You're not just here to complete a training program, you're here to shape the future of your audit team and contribute to the success of your organization. Your journey in the Get Ahead series is a testament to your dedication, and I have the fullest confidence that you will emerge from this experience as a skilled and confident Caseware user, ready to take on any challenge. Once again, welcome to the Get Ahead training series for Probe Audit. Let's embark on this journey together and make the most out of every opportunity to learn, grow, and get ahead. I'll now leave you in the very capable hands of your trainer, Joanna, who will be taking you through this series. Thanks, Joanna.
Thanks, Christian, and once again, welcome to everybody. Right, so that was Christian, and Christian is probably going to leave us now to go to the guys on the Audit International series, also to go and welcome them, but he will be popping in later today. So he also said he wants to come and see what questions we are asking and addressing. So we'll see you later. Thanks, Christian. All right, then what are we going to talk about today? The agenda for today, just want to make sure that the slide is moving right. The agenda for today is really an introduction to not audit as such, but into Probe, and then how we're actually going to start using Caseware in completing our audit file. We're going to start very, very, very basic. Remember that the majority of us are first-year trainees, and we're going to have a look just now also to see who is in our room today. but we've got a lot of people attending, and this session was specifically designed for those delegates who are very new to the process and who really need to start, I want to say slow, but not too slow, but to start with the basics. And then as we move into the sessions, we're going to really start and pick up the pace and look at a bit more technically and a bit more challenging topics, and of course, specific sections in our audit. All right, so what do we have for today? We're going to have a basic explanation of an audit. We're going to look at things like source documents and how those are processed through to the general ledger. How do they ultimately land in the financial statements? We're going to just have a short discussion on the probe audit methodology, almost like a bird's eye view from that. We're going to also then discuss terms like materiality, risks, assertions, things like that. And then we will end off with documentation requirements and the audit program conclusion. So in between, we're also going to touch on things like tick marks, referencing, and all kinds of things. So there's going to be a lot for us to discuss. Right, so you might have already also seen the in the video that we showed beforehand, what to do if you lose signal, anything like that. But let's just start. So I've muted all the delegates. But if there really is a pressing need and we need to have a discussion, I can unmute you. But for now, all delegates are muted. And of course, you can use the questions function. We've already seen 2 questions coming in. So please, if you want to, just go and have a look on your GoToWebinar software. There is a part that says questions, and you can submit your questions. And we've got dedicated people who will monitor those questions and either already answer them to you, or sometimes publicly if it is something that's relevant to everybody. And then if it is something that I should rather present on the video, we will also have those ones flagged so that I can address them as and when necessary. All right, so please feel free to use the question function. And then I've just added a point there to say that the recording of the session will be made available. So we are recording the session, and then marketing will work through it. And at some point, those will then also be shared with you. So not necessarily right after today, but we will be sharing those recordings at regular intervals. Of course, the whole series will carry on through the year. So we're definitely not going to make you wait until the end of the year before we share the recordings with you. All right, so recordings are available. And then maybe another point also is that if you want or need a CPD certificate for today's session, please, you really have to then make sure that you are logged in with your unique registration link, or then by yourself. So if you are, for example, logged in with one connection and there are 20 or 5 or 3 or even 2 of you sitting there, we can only provide a certificate of attendance and participation if you have been participating in your own link. So if you are only signed in as a group, that may be necessary. It could also be helpful for you to actually be participating, be submitting questions, completing the polls, all of those things. So perhaps that's just something to bear in mind. All right, before we get any further, I want us to start off with a poll and to say, let me just get my polls down. So I'm going to launch this poll and ask you, do you have today's course material downloaded? If yes, great, fantastic. If not yet, we are going to actually include a link to the material into the chat. I have asked Malagay to just make sure that someone from our support will actually include that link there so that you can download it. You don't need it right now, so please don't worry about it. I just wanted to double check that if anybody still needed it, that we will make the recording, or rather the link available. You can download it at some point, and then you will also have access to it. So the material in there includes the slides for today. So you will have a copy of the slides. And then secondly, also there's a CaseWeave file that you can start working with So later on, when we start to get into the file, have a look at the document manager, start doing things like tick marks and references and things, then you've got the Caseware file. All right, so that's the same Caseware file that I'm working on. You've got a similar copy to that, but we will make that available to you now if you haven't got it yet. At the same time, also in one of the emails that was sent to you, there would also have been a link to say, click here to download the material. So there will be an opportunity for you still to download that. If for some reason you haven't downloaded and you don't necessarily want to work with me in the file, that's also perfectly fine. You can, of course, practice it afterwards as well. And you're going to do this lots and lots and lots of times. So we will make sure that you've got the material available, so that you can actually download it. But you can also follow with me in the video by yourself. All right. I see there that somebody's asking, are you referring to the PDF and the Caseware compressed file? Yes, that's exactly right. So there is the PDF of the slides for today, and then there's a compressed Caseware file of the company called Wrap Up. So you just need to make sure that you go into the folder that stipulates Probe, Introduction to Probe, and then you'll be in the right Caseware file, or have the right PDF slides and the right Caseware file as well. Maybe I must just quickly open my Windows and just actually show you what it looks like, even from where I downloaded it. Just give me a second. Right, so let me show you this. I must actually close the poll as well. Okay. Good. So here you will see that there's a folder that says GA Get Ahead Learners. And then if you go to the Introduction to Probe, there's your PDF of the slides, and there's your Wrap Up, your compressed Caseware file. All right. Good. So that was our first poll. Then I'd like us to have a look at the next poll, just to get an indication of who we are working with. So my question is, what year of your training contract are you in? Are you in first year, perhaps second or third year of your training contract? Are you already a supervisor or manager? In other words, your training contract is complete. Perhaps you are at an audit firm but not completing your training contract. I often have a few of those delegates participating, so you're welcome. And then we've got some others. And then I'm always super curious to know, where do you fit into this process? So if you want to, you can always let me know in the questions. So the questions are private, so I won't put you on the spot, but then I can also just get an indication of where you are from, what is your background, just to also take that into account. All right, I just want to see the progress on the completion. I've got 66% of people that voted. Please give us some votes so that we can see where you are in this process. I'm very glad to see that we've got about 30% of the delegates being first years, but then also more senior trainees and supervisors and managers. So this really is a team effort at seeing what it is that we can learn about Probe. So that's fantastic. All right, we had 70% of the votes, so please, if you can, complete the poll so that we can have a look at this. Okay, I see some good comments in the questions. Someone is saying second month at an audit firm with no prior auditing experience. Now, this is exactly the course for you, so welcome to you as well. I've got a person who's in their fourth year of articles. Yes, of course, that I didn't include, so thank you. That works very well with other than, hey. Good, so we're almost on 80%, so I'm gonna give about 5 more seconds and then we will close this poll to see who we are sitting with, who's joined us in today's webinar. And I might be doing this on every webinar just to have an indication of what our audience looks like, and you can also see what your colleagues for the day look like. Where do they fit into the food chain? Okay, good. I'm going to close that so we can have a look at the results. There we go. Right. So we've got 29% of first years, second and third years, quite a few, supervisors and managers, and then we've got 6% persons being at an audit firm but not completing their training contract, and then the others who have then responded to me, a few of you, in the question section. Great. Good, that is fantastic. So welcome and thank you so much for completing that so that we can know who we are talking to and who is participating in the questions. Great. Back to our slides. Good, so we've done that poll. Now we are going to talk about audit and specifically probe audit today. So where does that fit in? So in Caseware and Caseware Africa, they have a variety of products and they all fall within what we refer to as the financial ecosystem. Now the financial ecosystem is intended to really help a firm to use the software for all elements of their practice. Some firms use everything, some only choose what they want to, but everything is available. Now where does today's session fit in? In the blue block, the assurance side of this ecosystem, and included in our assurance ecosystem or insurance section of the software, we have audit methodologies, which is then Probe on the one side. There's also another one which some other firms use, which is called Audit International. We have Probe Review, so that is to do an independent reviews. We have compilations. We have Quality. The product itself is called SQM, which runs on our cloud-based Caseware Cloud, which is an app. Fantastic. I'm very fond of it, but it's also because it's my baby. So I'm very, very fond of SQM. It's really to help firms with their quality management or their system of quality management. Then we also have other apps on Caseware Cloud, which is called Agreed Upon, as you can probably hear, to do agreed upon procedures in. We have attestation, which is where you do other assurance work, like, for example, your attorney's trust account audits, or perhaps even the trust account audits for legal practitioners. And then there's also an analytics leg where you can do some analytics, on data analytics on client data, or I guess even on your own data if you want to. All right, then we've also got the secretarial management, which has got to do with companies at compliance, trustee compliance, those kind of things. Lots of elements in the tax section to help firms to complete the client's tax returns, and of course financial reporting, which you would have learned a lot about when you attended yesterday's session about financial statements, both IFRS and IFRS for SME, and then a variety of other types of reporting as well. All right, so we then fall into assurance for today, and specifically in the probe audit methodology. Good. So what is an audit? For the sake of us all being able to focus on these slides, I'm actually just going to hide my video. I'm sure you've seen what I look like now, and I might come back up later on. But I just find that when I'm moving the slides, then very often the fact that you're also streaming my video and I can't sit still, I'm moving all the time, that then actually affects the quality of the sound. So I'm going to switch off my video, but you will hear I'm not going anywhere. I'm still here. And so we will continue to work. Right, so what is an audit? Now, an audit is, if you want, a process by which we gather evidence to support an audit opinion. So the end result of any audit is always that audit opinion, audit report that the client includes with their financial statements. Now, what is that audit opinion? It really is a statement that provides assurance to the users of the financial statements about whether those financial statements are fairly presented. So this audit opinion, we say it gives reasonable assurance. Now, that's obviously, I almost want to use the word stronger assurance than, for example, limited assurance, your independent review type of engagements. Reasonable assurance is, of course, never absolute assurance. And the reason for that is quite simply because we will always test or get our evidence only on tests or on samples, on selections of the data. You can imagine if you wanted to go and audit the revenue of one of the big retailers, think about where you buy your groceries, all right? If you think about the volumes and volumes and volumes of sales that they have every minute of every day, it's impossible for us to really go and audit every single one of those transactions, every single one of them, to ensure absolute assurance. So we perform procedures, we use technology, we try and be as clever and as efficient as possible in order to get reasonable assurance that when we give our audit opinion, it is right, but of course, never absolute assurance. All right, and what are we doing in a Caseware file? Why do we have Probe as the software to help us to complete an audit file? Well, we are building our file of evidence. So the audit file is ultimately the evidence that we are putting together to support the audit opinion. So you always need to know that when you are getting to a conclusion on a certain section, when you've performed one test, let's say you had to select 20 items and do X or Y or Z, or check the invoice or make sure the VAT was correctly calculated, whatever you're doing, every single one of those procedures actually have a little teeny tiny mini audit opinion assigned to that little procedure. And so because all of those put together is going to make up your audit evidence that's going to support the opinion. So if at any point there is an instance or an indication that, actually at this point I'm feeling really uncomfortable about the evidence that I'm getting, well then at that point you actually need to speak to your seniors, speak to your manager and say, I'm not sure how to deal with this issue or this problem or this error that's come up. Why? Because it might ultimately, if you add all of those problems, all of those errors, all of those issues together, it might actually become a big enough problem that the audit opinion will not be unmodified, will not be a clean audit opinion. Not that that's a problem as such, but of course, the client's always hoping for that. So then we need to engage with the client and see, can they fix this? How can they fix it? If not, or only partially, what's the impact on the audit opinion? All right, so that's the audit. So before we go and audit, what are we auditing? Well, we are auditing a client's financial statements. Right, so we are checking to see if the financial statements fairly present the company's affairs. So then if we go and look at or think about financial statements, the question arises to say, where do financial statements come from? So where do they come from? Well, financial statements are the end result in a whole process of reporting. What comes before that? Well, before that, we have a trial balance and other information. And look at that other, that's underlined. We're going to look at the other just now. So where does the trial balance come from? Well, that comes from the client's general ledger. Okay. But now what is the general ledger? Well, that is a summary of all the sub-ledgers and all the journals that the client has put through. And where do they come from? Well, the transactions that are recorded in the sub-ledgers all come from source documents. And where do the source documents come from? Well, the source documents are supporting transactions or actions that happen, like, for example, purchasing products, selling products, and a variety of things. Staff working for you, well, guess what? We have to pay them a salary, just like you are hoping to get a salary at the end of the month. So every action that's taken, every reaction, every transaction, all of those things lead to source documents which are recorded in the client's sub-ledgers or through journal entries, ultimately landing in the general ledger, which then makes up the trial balance, which is almost like a summary of your general ledger. And the trial balance, together with the other documentation, then is used to prepare the financial statements. All right, so let's just have a quick look at what is that other stuff. So other items or other sources of information that is also used in preparing financials is, first of all, loan agreements. If the client has any loans, we need to disclose those loan terms. So if some of you have already studied accounting frameworks like IFRS, or maybe you've studied IFRS for SME, you'll know those financial reporting frameworks require specific disclosures in the financial statements. And when we're auditing, we're not just auditing the balance sheet and the income statement, or those long terms, statement of financial position, etc. We're not just auditing those statements, cash flow statement and so on. We are also auditing all disclosure in the financial statement. So all of those notes that has, for example, loan terms, any securities, any other items that need to be disclosed in terms of the financial reporting framework. Other documentation could be assets that have been provided as security to the bank or to creditors. And so we'll need documentation or proof of firstly the security, or of the fact that those assets, which assets is it exactly that's been provided as security. So those documents, that evidence will also be needed to draft the financial statements. Right, the related party list. Okay, so somewhere the client needs to give us information of who are all the related parties or parties that are related to them. Now remember also, those aren't going to be in the general ledger. Yes, the transactions with them, or perhaps the balances outstanding to or from them, will be in the general ledger and the trial balance, and so we'll have it in the balance sheet, for example. But if we don't know that those entities are actually related parties, we won't know that they need to be disclosed as transactions balances regarding related parties. And then, of course, also another example being the lease agreements, in order to disclose the commitments in the short term and the longer term. And this list is, of course, just a short example of a variety of topics. There can be many, many more that will also be taken into account here. All right, I just want to have a quick look at the questions. I think we've got most of the questions under control. Good, we seem to have everything under control. Good. Right, so that's the other parts then of what we also need in order to put the financial statements together. Now, also remember, just at this point, that we are not drafting the financials. I'm actually just going to go back to this one slide. We are not drafting the financials. We are auditing the financials. So this is the result of what the client has either prepared themselves, or they have already gotten someone else to prepare the financials. And as the audit team, we are merely coming in to check if these financial statements are appropriate, if they are perhaps materially misstated, anything like that. So when we are going to audit, yes, it's not that we're going to ignore everything that came before this. We are going to use everything that came before the financial statements as working papers, evidence, as documentation to help us to check if the financial statements are correct, if they are appropriate, if they aren't perhaps misstated, and if they are misstated, if it is materially misstated. Right, so that's very important for us to bear in mind. As the audit team, we are not preparing the financial statements. Someone else prepared them, and we are simply looking at the financial statements and testing them, getting evidence about whether they are appropriate or not. Good. Then let's have a look at what would be an example of the source documents. So the source documents are those ones that the client uses, we sent to record transactions. Now, let's look at an example of how a client will use a source document. This is just one example where the client gets a supplier invoice. They had some consulting work to help them to improve the manufacturing process, right? So that's the invoice they're getting now from the company from the company ABC Limited. They help them. Note the amount, X VAT is 95,000, including the VAT is 109,000. So that's the invoice they're getting, and they need to now go and pay the client. Okay, it's one thing to pay the money out, but the books need to be recorded as well. So other examples, as we've mentioned before, could be lease agreements, but the lease agreement could give you the information about the commitments, but also about the actual amount that was paid for the lease, now this month or next month or whatever month. And then, of course, an amortization schedule that will help us to know what amortization to write off against relevant assets, or even like a depreciation schedule or something like that for property, plant and equipment, etc. Okay, so this screen that you see now is the actual invoice that we received from the client, and so therefore not a client, from the supplier. So the client, our client that we are auditing, Wrap Up Manufacturing, didn't create this document. They got sent it either via the mail or via email or any other way, they got this invoice, right? So what are they going to go and do? They go and record this in their accounting records. Now, in their accounting records, they don't go and record it straight into the general ledger. They get an input screen in their software. And this example is just from one of the options of software. There's, of course, lots and lots and lots and lots more of different software packages that a client can use. So this is really just one example. So they take that same invoice and they go and record it into their accounting package. Now let's have a look at some of the things that we see. So when they're recording it, they are saying, well, this invoice comes from the supplier called ABC Limited. That balance is in there. That's from other invoices that they've had. And the invoice details for today is invoice number A123. If they had a specific purchase order number, they would put that in there. The client's VAT reference number, obviously a longer one, but that's the VAT reference. What's the date of the invoice and when is this amount payable? Okay, they'll also record addresses, and then they will go and record exactly the information as per the invoice from the supplier. Consulting fee, the amount excluding VAT, 95,000, and then the software will, because they've indicated that there's standard VAT on it, will automatically add the VAT and record the total of the invoice. They will then save this, and well, what are they going to pay the client at the end of the month when it's due? They'll pay 109,000. That's the amount of money that will go to the client. However, the actual expense is only 95,000. So let's see what happens when we get to the GL, or the transaction that's processed. We see there that the creditor amount due is 109,000. The expense in the statement of profit and loss and other comprehensive income, that's what SPLOCI stands for. Or if we want in plain simple English, income statement, that is 95,000 Rand. And then of course the VAT. Right, so that's the entry that goes into the general ledger. And then when we get to the actual general ledger, here in our expense, in the income statement, consulting fees, on the 23rd of March 2023, there was purchases and the supplier invoice number and the amount of 95,000. Good. So that's then what's in the general ledger. And of course, the total of these transactions in the consulting fees will ultimately get to the financial statements as the total expense for the year. Good. So that's how items end up in the financial statements. Just want to check again. We've got, okay, so I see we've shared the recording. Thank you very, oh, sorry, the material. So you can download the material if you haven't done so yet. You don't need to do it right now. I do see a question there about Probe for independent reviews. Just to make it clear as well. So the Caseware suite of software has different templates. So the template that we are talking about today is the Probe Audit one. You can use Probe Independent Review or Probe Review if you choose to do that. It is a separate template though. So you will have to check which template your client uses, whether they use the Probe Independent Review. Some clients might be just doing it in Excel, maybe in Word or something. So just check whether your firm uses that. Okay. Good. I see now that Helen's already answered it on my behalf. So thank you. Actually, I hadn't noticed that. Thanks, Helen. Good. Then with regards to your methodology. So we've spoken now about what is an audit, how do the financial statements get generated, how does the transaction ultimately end up in the general ledger. Now, let's look at an audit methodology. All right. So the international standards on auditing are principle-based. There's a lot of requirements of what must be done, but there's also a lot of principles that says this must be done, that must be done, but the how part is often missing. So a firm will decide how they are going to implement the auditing standards. And from that how, they will then develop basically their methodology to say, this is what we're going to do when we audit, when we do the planning, when we do the procedures, when etc. etc. Now, Probe Audit Premium Plus, which is the long name for Probe Audit, that is software which incorporates the Probe Audit Premium Plus methodology. So if you use Caseware to store your working papers and to make up your audit file, the option is to use Probe Audit to actually put together your evidence. Everything from the first to the last standard, all the requirements in there, helps you to then follow the process, the how part. Now, this is where we're going to start the quick or the high level bird's eye view overview of the Probe Audit methodology. So I want to take you on a little bit of a journey. So in the Probe Audit methodology, when we look at this, it's almost like thinking about a navigation system. Many years ago, we started with Garmin's, and everybody used to have Garmin's. Before that, we used to have, like, really, my son's about 7 years old, and when I tell him about map books, he looks at me very strangely. So maybe there's some people today that still remember map books. If you don't, that's fine. What do we use today? We use our phones, and we probably have a variety of apps on the phone that helps us navigate where we need to go. All right, so in using the Probe methodology, we first start off by deciding on our destination. So where do we want to go? Let's say, for example, we want to go to, we're in Johannesburg now, and we want to go to Cape Town. They said the weather is nice there this time of year. Well, actually, it's quite warm, but it's nice there, and we can go visit the Table Mountain, and we can go to the waterfront, whatever. We are going to Cape Town for the weekend. Go. Now, that's where we want to go. That's the destination. If we use that same analogy and say, we want to use this navigation system, where do we want to go? The analogy starts with saying, where do you want to end? Where do we want to go? Where do you want to end in your audit when you sign your audit opinion? So you will have to select your desired audit risk. And this is a term for the Probe Audit methodology. So you've got to decide your desired audit risk. We said this already at the very start of the audit working papers, and that's just in case you wanted to note it, document 1020. Okay, I'll show you 1020 later on, so it's not important now, but just so you know, we start that in section 10. So what is the desired audit risk? The desired audit risk is essentially saying, what level of remaining audit risk are you prepared to accept for this audit when you get to the end, when you've done all your audit work and you now need to sign the audit report? And then the Probe Audit methodology uses specifically two inputs to help you to decide on that. The first one is going concern, right? And the second one is the users, but we're going to talk about the users just now because it's a bit more tricky than just users. So going concern, right at the start of the audit documentation, we ask ourselves, have we come across or any indication that this client might not be a going concern in the foreseeable future? And more so, we actually say, what do we believe the risk to be that the client will not be a going concern? Is this risk low or is this risk high? It's pretty much, is it a problem, yes or no? Okay, there's no middleness here, it's yes or no. So that's the first input into deciding or determining the desired audit risk. The second input into determining our destination in this navigation system is to ask ourselves about the users. In terms of the users, we are asking ourselves, who are the users to these financial statements as a starting point, and then asking ourselves, do any of the external users indicate increased risk to us as auditors? So the fact that there are 3 shareholders, that all 3 of them get the financials, that doesn't give us an increased audit risk. But if we know that the bank wants these financial statements because they want to see if they're going to extend the client's overdraft, if they are going to increase the client's overdraft, if they are going to lend them money for working capital or whatever the case is, if the client is going to use these financial statements to give to a potential investor to buy shares in this company, and so on. So in those cases, then we say, oh, hang on. Yeah, I'm becoming aware of instances where the client is actually going to say, oh, these auditors, they looked at this set of financial statements. So, you know, they've got a good reputation in the market. or, oh, you know, these guys, they don't really audit. No, they are saying this audit opinion that I'm reading here on page 5 says the financial statements are fairly presented. I believe in these auditors. They have done what they needed to do. And so therefore, I can trust that the financial statements are fairly presented, not materially misstated. There aren't any major big risks, sorry, not risks, errors in these financial statements. All right, so that's what they're looking at. They're looking at the going concern risk at planning stage and whether external users indicate increased risk. So it doesn't mean, oh yes, SARS wants to see what's in the balance sheet. That's not an increased risk. But if there are specific reliance placed on our financial statements to make financial decisions, that could be indicating it. All right, so we're still with our destination. Where do we want to get to? We want to get to Cape Town. We want to go to the waterfront tomorrow afternoon. We want to maybe watch the sunset on Cape Town, on Table Mountain tonight, things like that. Okay, so where do we want to get to? We want to then get to our desired audit risk. And the 3 options are low, very low, or minimum. Now, I know we are very inexperienced, or many of us are very inexperienced, haven't done auditing before. So I'm not trying to overwhelm you with the information that I'm giving you here. But I do believe that when you get into auditing your first section, it will be beneficial for you to at least know of these 3 terms and what they mean to you. All right. So I'm not going to give you a big lecture on audit risks and all those things, but it's important for you to know that these 3 are the 3 options for desired audit risk. Now, what do the different levels mean? So in the bigger scheme of things, when we get to risk of material misstatement later on, you'll see there's actually a few higher levels as well from a risk assessment perspective. But we only have 3 options of where we can end right at the end of an audit before the partner signs the audit report. And only these 3 will be acceptably low levels. So the first one is low, which is, it's low enough, it's good, okay? We don't have to do too much work to get to a low level, but we are comfortable that we've reduced the audit risk significantly to the low level. So having said that, this is the highest risk of the 3 desired audit risk levels. That would be indicated when the going concern risk is low and we're not aware of any external users that are going to rely on our audit opinion. The middle one, very low, is of course a little lower than low. And that will be the indicator when we either have a going concern risk at planning stage, or we know of users external to the company that is going to rely on our audit opinion in making a financial decision. And then we will have minimum of course being the lowest of low, which will be the indicator for our desired audit risk if or when we decide that the going concern risk is high and there are external users that are going to rely on our audit opinion. Right, so that's the desired audit risk. That is where we say, where do we want to go? We want to go to Cape Town and we want to go and watch the sunset there tonight. Good. Next up then, we know what our destination is. Next, the software will, or the app will ask you, okay, so where are you now? Where are you now? So this is where the GPS tries to locate the satellites and sees, oh, I see, this person is in Johannesburg, or this person actually is just up a little, a little distance away from Cape Town. They're actually out in Worcester. Okay, so obviously you can imagine the extent you're going to have to travel, the effort you're going to put in traveling is going to be different, whether you are going to be traveling all the way from Johannesburg or whether you're going to be traveling all the way from Worcester. So how do we, in the probe methodology, then search for satellites? How do we determine where are we in this process? So we do that through risk assessment. So in the risk assessment, we will go through quite a few documents, and you'll see their references in the little lines of the pyramid. You don't have to worry about them too much. What you might want to just notice is that all of them start with 11. because the section 11 is the risk assessment section. Okay, that's pretty much the most important thing to remember or to just note at this point in time. So we know we want to end up at the desired audit risk, being low, very low, or minimum. And we now say, well, where are we? To determine that we are in Johannesburg, or to determine what our risk of material misstatement is, in this case, we go through the risk assessment process. And the elements that we consider here include, well, risk assessment procedures, which are then recorded in, firstly, a variety of documents where we record our understanding and so forth. But then, first of all, the materiality of that section of that balance plays a role in helping us determine the risk of material misstatement. Really just to say, and this is primarily to say that we need to make sure that we always audit all material sections. Okay. Secondly then, the inherent risk at assertion level. So this is where we will go and we'll say for sales, completeness, for property, plant and equipment existence, or valuation and allocation, all of those ones. Good, that's your second element. And then at financial statement level, we also have inherent, fraud and control risk. All of those elements then make up our determination of the risk of material misstatement. Good. And this then is where we get to the risk table, basically, that helps us to determine what is the risk of material misstatement in this table, all the way from low up to a very, very high being the maximum. And so once you've then got your destination, which is your risk of, your desired audit risk, we know where we currently are. So the satellites have found us and we are, let's say, currently on medium 3, being, let's say, Johannesburg. That's then where we can use the methodology to help us to determine the journey. We know where we are, we know where we want to be. Now we are going to determine the journey. And now the fun thing here, well, at least for me, it's a fun thing. Sometimes when I want to go to a place and I'm not sure where to go, you might have noticed that you have different options in which to travel. You can give an indication to your app to say, well, I'm walking. Today I'm walking, so please give me the best route that I can walk. So obviously then it mustn't let you go on the highway. Or I'm cycling, or maybe I'm going to be flying. So don't tell me it's going to take me 17 hours to drive from Johannesburg to Cape Town, because I'm going to go fly. And then, of course, then I need to actually first travel to the airport, not straight onto the N1 and start driving to Cape Town. So there's different ways in which I can plan my journey, different methods of transport. You might use public transport, you might use Uber, you might have a variety of options. And so that is also a choice that you have in choosing your method of traveling, your journey. The same thing happens in the audit methodology, all right? Just in case you thought, no, she's fine lost it. No. We also have a choice in how we travel to our desired audit risk in the audit methodology. So we'll choose a journey that takes us from the risk of material misstatement and reduces the risk all the way to the desired audit risk. But we will do it in such a way that is the most efficient route, that gives us a quality audit file and also gives us the most value to the audit. So we'll choose that option. We're going to look at the different little indicators on our route as well. Have you seen, when you're driving on a road, these signs next to the road? They're normally white with a little red border, and they've got like a black number inside. Maybe it says 60, 80. I know here close to my house, there's one that says 70. That one always catches me because I never know where to go, and then I'm often speeding there. Some places you can go 120. Have you seen one that shows 180? No, of course, we don't have those in South Africa. So, yes, those we call traffic signs. And they tell us about rules, specifically about how fast or how slow we can go on the roads. So in Probe, there are also 3 traffic rules. Now, those 3 traffic rules we have to abide by, and the methodology actually helps you in most cases, reminds you in most cases to actually comply with that. Otherwise, you'll have a warning later on, etc. So, rule number 1 is about significant risks. If you record a risk that is so important that we record it as a significant risk, you have to respond to that risk specifically. So even if the work program has some, let's call them generic or standard responses in the work program for that account, for that section, for that assertion, if you identify this risk to be a significant risk, you must respond to that significant risk specifically. Right. The second one is when you choose to place reliance on controls. What do we mean by that? Well, we say we believe that the client's controls are so good that they will actually help give us audit evidence that the client's accounting system is working well enough to prevent misstatements in the accounting records, or if they are actually slipping through, to detect them and then correct them. So the client's system is already fixing problems as we go along. Now, if I want to rely on those controls, well, then the second traffic rule says you must then test the operating effectiveness of those controls. You know, it's one thing to say you have designed this beautiful thing. Let's say a car, perhaps. You've designed the most beautiful car, you've built the most beautiful car, but there's actually no ignition for this car to start. So you actually cannot drive this car because there's just no way to actually switch it on. So we cannot just look at how the control was designed, or what is the client saying it does. We need to also get audit evidence that the controls are doing what we believe they are doing. And what is that? Well, making sure that mistakes are not happening when they are recording transactions and other actions in their accounting records. Good. So rule number 1, significant risks must always have specific responses. Rule number 2, when I want to rely on the controls operating, I will have to test those controls. And then rule number 3 is linked here to required procedures. And that is saying that where I have identified an audit risk for a specific section, for an assertion or more than one assertion, or yeah, let's leave it there for now. Where I have identified risks, I've recorded risks for one or more assertions, I have to perform procedures for those. Okay. Linked to that, so in other words, if I perform procedures, I get audit evidence. Linked to that is where I have a selected assertion, then I must also perform procedures for that. So either assertions with risks recorded or selected assertions, we must perform procedures. So just quickly, I'm probably getting ahead of myself. I've got a slide later on to talk about selected assertions. But you may be aware that in ISA 315, the 2019 revision, we now have assertions that are either, well, relevant assertions, which we'll talk about later on, the risk ones. And then there's a rule that says when you have a material account balance transaction or disclosure, you have to perform some work for that account balance transaction or disclosure. In other words, we can't not do anything. And the way that we do that in probe audit is we select an assertion and then do work for that selected assertion. So we'll talk about that a little bit later. But for now, if I have an assertion with a risk, or if I have a selected assertion, I will always perform required procedures. Okay. Then further on, I do still have choices. So there's 3 traffic rules, but I can still choose whether I actually need to do substantive sampling. Now, sampling is where we're going to select a sample of items rather than just testing everything. I can do extended test of details, or I can actually do extended analytical review procedures. So there I can really choose what is the best or the most effective way for me to get to my destination. Now let's go back to our example of traveling to Cape Town. So we're in Joburg at the moment. I realize not everybody's in Joburg. I myself am actually in Cape Town, so that's fabulous. But in our analogy, we're in Joburg and we want to get to Cape Town. We all think, if I ask you what's the best way to get to Cape Town, what would you say? Well, you probably think, flying, that's the best way. That is a fantastic way to get to Cape Town. But have you borne in mind that getting to Cape Town by flying is quite expensive. So maybe you really want to get to Cape Town, but yeah, you know, it's a bit expensive. So let's not fly. Okay, great. So we can drive. But now also we want to go there for the weekend. So you're going to have enough time to go to Cape Town and back if you drive. Well, maybe not. So maybe you must now then take the faster route, even though it's more expensive. Or maybe we can row to Cape Town. Have you ever tried rowing to Cape Town? I certainly haven't. But think about it, it's possible. You can fly to Durban and then get on a boat, like a rowing boat, and start rowing all around the coast until you get to Cape Town. It's possible. It's going to take you a while. It's not going to be fun. It's going to be very hard work. But you can do that. It's going to take a long time. So be careful of always just taking the safest road, I almost want to say safest route or something like that, rather than saying, well, what is the most efficient way? What is the most appropriate way for me to get audit evidence here? So it's possible that sometimes we just say, oh, you know what, last year's file, they did a sample of transactions. So let's just do a sample this year as well. Sometimes selecting a sample and auditing all of those sample items to death is almost like flying to Durban and getting in a boat and rowing all the way to Cape Town. So I'm not saying never, ever, ever sample. That's not what I'm saying. I'm saying from looking at the 3 traffic rules, what must we do? And then considering the other options, let's look at what is the most efficient way for us to get what we need. Efficient, not being the quickest or the shortest way, but being what is the way in which we will get the right answer, get the appropriate level of assurance, comfort, without spending unnecessary time, effort, money, etc. Right, because if we weren't worried about getting it done at a certain time, and we weren't worried about how long it's going to take, how much effort it's going to be, where we're going to get the time to look at all the invoices, well, what would we do then? Easy. Then I just say, well, let's select every single transaction, and even if it takes me 3 years to get the order done, great, at least I'm going to know everything's right. Okay, that's also a little bit unrealistic. So that is really the audit methodology. So we start by saying, where do we want to get desired audit risk? Okay, and we're on 10 o'clock now. In case you're getting a little bit tired, we'll take a comfort break just now. But we're saying it's 10 o'clock Friday morning. If I want to watch the sunset on Table Mountain tonight, for me personally, I said now earlier, I'm in Cape Town, so I'm in Durban. It's about 35 minutes drive from my house to get to Table Mountain. So to me, I'm not even going to think about flying. But for you, it's going to be a different route. So we say, where do we want to go? And then next we say, where are we? What is the risk of material misstatement? And in some clients, the answer is going to be quick and easy. Just select all the material items, test them, get it over and done with. In other instances, it's going to be, well, we need to test controls to check if the system is helping us. And then we need to actually do analytical procedures. And, you know, in some cases, even after that, we might end up either doing extended tests of details or sampling. Okay, so just bear that in mind in terms of how we decide on the best route of how to get there. Good. So let's have a look at the picture for Probe to also just see how the methodology then helps us. So we've done the risk assessment on the left-hand side to tell us what the risk of material misstatement is. Then when we get to do our audit procedures, we have the rules, the traffic rules, significant risks, test of controls, and required procedures, and then the option of doing the last 3, extended test of detail, analytical review, or sampling in order to get back to our desired audit risk, which is what we knew from the start where we want to go. Okay, we're going to look at the caseware file in a while, and then I'll also show you where all of this stuff happens. Right, so then just in terms of the application, the route that we're going to take, we saw the picture of the route earlier on, that is documented in our audit strategy, which is in 1120. Sorry, 1120, listen to me, which is in section 12. Don't know where 1120 came from. So that's in our audit strategy. I'll show you the audit strategy later on. Then we also have the detailed work programs for each section, and that work program covers all the stops that need to be made on the route. So in our audit strategy, we said for inventory, we are going to test the controls, or we're going to do the significant risk response, or whatever it is that we're going to do. Then we will have those sections with the specific procedures in the detailed work program helping us along the guide on the route. All right, so there's a list of all the procedures. We have to, however, tailor those to the risks that we've identified, and of course also to our client. Some clients will have different types of documents, some clients will have different types of, in my example, inventory, which you will audit differently to another client's inventory. And then we will only perform work for the assertions for which a risk is raised, or where we have those material sections with no risks, but where we've selected assertions for them. Okay, so in other words, the work program is 100% tailored to our client, to our risks that we've identified, and to make sure that we get the audit evidence that we need for this client. Good. All right. I want to now just quickly take a quick moment to check if there are any questions for me that I need to respond to, anything that hasn't been addressed yet. Let's just quickly see here. If you have any questions and you want me to answer them, you're of course welcome to also post them. Please don't hesitate to answer, submit questions. Good, it looks like the, let me just scroll down here. Good, so we haven't got any outstanding questions, so that's all good. Thank you. I do think that it's now a good time for us to take a comfort break. There we go, or if it's caffeine you need, a coffee break. So that's all good. Yeah, so it's almost 10:05 on my side, so let's have a comfort break for about 10 minutes. So then we'll start at 10:15. Grab your cup of coffee, do what you need to, and then I will see you again at 10:15, and we will then carry on with some of the material. Just as a heads up then, when we get back, we will then start to look at the Caseware file. So if you haven't had a moment to open your Caseware file, we're going to start doing that after our tea break. So you may maybe just want to open that Caseware file along in the meantime. All right, so enjoy your break. I will be back and chatting to you again at 10:15. Levels, just so that you can see I'm still awake. I hope you are too, refreshed, and that you've got your cup of coffee and that you are ready. All right, so we are now going to move on to the document manager in the Caseware file. And I'm going to start showing you a few things in there just with regards to the basics of what happens in our audit file. So I know that you've probably attended the Caseware session on Wednesday. We're not going to talk anything financials from yesterday's topic, but you might find that some of the things that was said on Wednesday, you might also hear or see today, and then realize, okay, that's also where it then fits into my audit file. All right, for the sake of our bandwidth and that I don't lag behind in terms of voice, I'm going to switch off my camera again so that you can hear me, even though you can't see me, but you can properly see my screen. And of course the voice as well. It's almost like as if the voice just lags, that the screen is changing. And if I'm moving all the time, then the screen changes all the time. So I'll switch myself off and then you can just follow on the screen. Good. So we're going to go to our Caseware file and have a look at the document manager. So this whole section is basically the Caseware file. And I seem to remember that Sandrine said on Wednesday, she had a little picture on a slide of a dinosaur with old lever arch files. And I remember the first time I saw it, I had quite a laugh at that, to say the files are still from the dinosaur age, because I still have a lot of paper on my desk, but those are mostly where I do technical reading. So a lot of our electronic stuff and most of our audit files these days are electronically. So my document manager then is basically showing me all the files that I have in my engagement file. All the documents, all the automatic things, etc. So you might have looked at a variety of items. The ones that are going to be of relevance to us today, let me just quickly, I'm going to actually switch off my spotlight and actually just use my normal drawing. So the ones that are going to be of relevance to us today will not be the firm setup, trial balance, or the financial statements, but we're going to focus on engagement working papers and engagement working papers, and then specifically here where we're going to see the audit stuff. All right. So we spoke earlier on about section 10, 11 and 12. So section 10 is the pre-engagement planning. These are the sections that's normally done by your seniors. All right, so I'm not going to go into too much detail about what you do in there, anything like that, just so that you know if you hear things that's probably not for you to worry about, but at least to be aware of. So in here we complete, for example, the engagement evaluation, and the engagement evaluation is where we also determine the firm's or the engagement's desired audit risk. We might complete things like the gathering information, the types and volumes of transactions. We're going to but work a little bit there when we do our cash and cash equivalents audit work. And we also set our materiality here. Okay, we're going to talk about materiality soon as well. So that's section 10, the pre-engagement. We also have the engagement letter in there. So of course, deciding if we're going to do the audit and then getting that audit letter signed. The next section is your planning and risk assessment section. So that's section 11. Section 11 has a variety of documents, your financial statement level risks, and then also 1160, your assertion level risks, as well as your controls and control activities. Okay, so that's section 11. The bulk of this work, again, done by your senior or done by a more senior person, and at first you would not necessarily get too very much involved here, except perhaps for the control activities relevant to your section. Good. And then audit planning is section 12. I mentioned earlier on that when you decide on the route, the journey that you're going to take on your route, that we do that in the audit plan and strategy, and that's there in 1220. There's a variety of other documents in there as well. And then once we know what route we're going to take, that's when we then get to our sections where we are going to go and do specific work. Let's just have a quick look at that so that we know we've run through them from top to bottom. General working papers, the focused inquiries is mostly for independent reviews, but we've got specific work programs that do not have any risk assessment linked to them. So this is just work that we always have to do on every audit. We have to audit the accounting records. We have to audit opening balances and comparatives, financial statement preparation, as well as the general IT controls work programs also sitting there if we have any of those we want to rely on. Good. Then we also have like a main section for each of the sections making up the financials. So your non-current assets, I'm going to just open the current assets for us to have a look at. And then in there, a section for each of the ones with balances. So not with balances, sorry, for each of the sections that could possibly be in the balance sheet or income statement, etc. So to look at your cash and cash equivalents, for example, point 10 is always your work program. So whatever the number, point 10 is your work program. And then, yeah, we've got cash and cash equivalents being the automatic document, being your lead schedule. We'll come back to those as well later on. Okay. So there's a variety of items. Later on, we're going to, I want to say play, although we're going to work, not play, perhaps in the trade receivable section. And we might even go to current liabilities, trade and other payables. Right, so that's where we're going to have a look at a few documents, but all of the sections are here. If your firm has not yet given you what we refer to as the cheat sheet for sections, that might be quite helpful. We actually shared that, I think it's about 2 years ago already, where the section numbers changed. And we actually just help people to see where that happened. So if you want to, if you want to have the section numbers just on a small cheat sheet, then we can also share that with you, because it's a nice, literally one pager where you can just see, oh, I need the, I don't know, the tax section or the tax payable or the section or that section. What is the section number? And then you can just have a look at that. So that is perhaps something that you can just have a look at. Of course, the old numbers aren't going to mean anything to you, but what you will find is that very, very, very quickly, you will quickly pick up and say, hang on, I know this number is that document, that number is that document, and then before you know it, you don't need your cheat sheet anymore. Okay. All right, so what I first want to show you is the columns that we can use in the document manager. And if you've got your Caseware file open, I'd like for you to actually do this with me. Whether you perhaps make the video a little bit smaller and the document bigger, you can see what's going to work best for you. So maybe just also to show you what I would normally do. Hang on, now I've closed my Caseware. Oh, at least it's not reflected. So when I'm standing on a specific section, what I might just actually do is to actually split my screen in two. And later on when we work on working papers, you also see that I'm actually going to split my screen in two. So the way that I do that, just as a tip, is on my keyboard, I click on the Windows button and hold that in and press left if I want this Caseware one to go left. So hold in, press left, and it goes left there. And then if I have something else that's also open, I'm just going to maybe have the Excel document open and then hold Windows, press right, and that's on the right-hand side. And now I can actually work across to see what happens. Okay, so let me just show it again. I'll just make sure that the screen first synchronizes, that you can see. And then I'm going to make both of these documents big again and show you how it works. And this is something that I use when I'm busy with my emails, when I'm busy with an email and an Excel sheet, whatever the case is. But especially if today you only have one screen, this can be extremely valuable to help you to keep track of what I'm saying and what you're trying to do on the Caseware file. So I hold in my Windows because I want my Caseware section to be on my left-hand side. If you want it the other way around, of course, just do it the other way. Hold in my Windows and I press the left arrow once, and that moves to the left. You can see that. Sometimes the other option will also pop up and say, okay, what do you want? If I've got a number of other screens open, it will ask me and I'll just choose which one. For some reason today it doesn't, so I'll go to the document that I want on the right, hold Windows in and click the right arrow. Oh, you see there it asks me. Actually not going to pick now so you can see. So it's taken the Excel sheet to the right. It says, these are all the things you've got open. Which one do you want to show on the left-hand side? And I'm going to pick the Caseware file. Good. So I hope that even with the syncing of the screens that you still get a good idea of how that worked. Good. Okay, that was now a check just because I was so excited to show you. I'm going to open up the Caseware file again to its maximum so that I know you can see as best. But if you need to move your screens like that to see the video, you can do that. And you can also move those, I almost want to say that the little frame or that end where the two screens come together, you can actually just move them left or right. If you want to maybe make the video a bit smaller, make the Caseware file a bit bigger, you can do that. The split between the two sections. All right, so what I want us to see is that these are column headings. There's a little one that says my outstanding issues, and there's one that says name. That's the name of the document. What I want us to do now is to actually change the columns that appear in my document. All right, now these are appearing on my file only. So if I change them, I'm going to see them, but if the manager wants to see something differently, they can see other headings. So I see someone's asking which button do I hold. Now, I don't know if that was the first or the second time I showed it, so let me just say it again. So I actually use the Windows button. So it's a little button on the bottom left of my keyboard that's got 4 blocks. So hold that in, and then I press either the left arrow or the right arrow. I'll see if I can make us a little screenshot in the next tea break or something. I actually wasn't thinking of showing you that. I just, for the moment, wanted to show you that. So I haven't prepared any screenshots of anything like that. Many years ago, someone in a seminar asked the delegates, who knows how to split the screen in two? And I was the very clever one, and I was like, I know, you just move the screen, you use this little thing, and then you make it bigger and smaller. And the delegate or the facilitator just said, yeah, that could also work, you know, moving it around and stuff, but that's not the best or the most efficient way. And it just ended there. And I felt so unfulfilled, like thinking, so if there's a better way, teach me that way. So that's what I love, since I've then figured out what it is. I love telling people how to use that technique. Okay, so I hope that's helped now. If you're still struggling, let us know, and then hopefully we can also help you with that with some screenshots after the tea break or something. Good. So we're busy with the column heading. So I've got outstanding issues. Sorry, it's my outstanding issues, and then names. I think it's my outstanding issues. Yeah, and name. So you can really decide what you want to show. And the way that you do that is you hover your mouse more or less in that space of the heading, right click, and then you can either then choose to add specific items one by one by one by one, which works, but it takes a while. Or you can say reorder columns, and then it actually helps you to quickly pick everything. And then you can just click OK eventually and go where you need to be. So what I'm going to do for us now today is the active columns currently has my outstanding issues, which is right there on the left-hand side, and name. Okay. What I'm going to do is I'm going to actually move my outstanding issues a bit lower. So I'm going to click on it and actually move it to go after name. So you'll see that if I press up, it goes up. If I press down here on the left-hand side, it goes below the name required. So when I then actually apply the change by clicking OK, then my name will go right to the left, and my outstanding issues is going to go to the right. Good. Then other items that I want us to show, and if you want to do this with me, you'd be most welcome, is I also want to show who did the planning of the document. So planning by, and I just click on the one on the right-hand side, which is currently in the hidden column, and I say move it to the active column. I also want reviewed by, and I also want performed by, and I also want final review, and I want deliverable. There I need to scroll up and down to say, is this document one of the deliverables, one of the things we need to give the client? What is the due date? But when must this thing be done? When must I have it completed? Give me all issues. Now I need to scroll again to find all issues. Give me all outstanding issues. We've already got that one. No, it was just my outstanding issues. This one's all outstanding issues. Give me, do you want to retain this on cleanup? Where is my item? Now, these ones towards the bottom are maybe not necessarily tricky, but might not be as obvious as to what they mean. So what does it mean when we say retain on cleanup? So on cleanup, that is when we, just before we go into lockdown, we clean up the caseware file from all kinds of superseded documents. Maybe you still had the bank statement in there, but the manager doesn't want the bank statement in the audit file, anything like that. Then we just make sure that it's not retained on cleanup, because when I then run the file for lockdown, it will first do a cleanup. And if I don't retain it, well, then I actually chuck it out of the file. It goes, basically gets removed from the caseware file and then won't be in my lockdown file. So that's another column that I can use to indicate what must be removed. So retain on cleanup. Oh, I see, I actually put that, oh, sorry. Retain on cleanup, I want to move it down. So I've got all issues, all outstanding issues, retain on cleanup. Then you want to roll forward this document. Yes, I want to roll this forward because next year I want to have the same working paper, same something as well. Or no, I don't want to roll it forward. Do you want it to be included or locked down when we do the lockdown? So maybe there is a document you don't want to change. I want it to be locked down. And then if somebody modifies it after it's been locked down, I want to be notified of it. You can pick any columns. These are the ones that I've just picked for today. And then once you've selected them, you can click OK. Before I click OK, I just want to see quickly. I see there's a question. Okay, someone's put in their email address, but I'm not sure why or what for. So hopefully that can be clarified. Good. So I've gone from the hidden columns to the active columns and selected an item to be moved across to the active columns. I can move them around by clicking up and down. And once I'm happy with all my columns, I click on OK. And now you can see that I've got a variety of new column things here on the right-hand side that's reflected. Okay. So obviously here we're mostly just seeing columns, headers, folders at the moment. But as soon as I get to actual documents, I will see a bit more information here as well. Okay. So that's really just to help you to make your file more specific for yourself. Okay, so that's the document manager. We've got all the folders. We're going to work in a lot of these folders later on, but we have now also modified the columns. Let's say I decide I don't want to show the modified column anymore. I can simply click on hide modified, being the column name, or I can add extra columns, click show and show more ones, or I can click, if I decide, no, actually, there's a lot of stuff I want to change, click on reorder columns, and I'll go straight back into that picture which I had earlier on. And I can remove what I don't want anymore. So this is another way of removing modified. We could have chosen hide and the modify and just click right, take it from the active column to the hidden column. And once I click OK, that is all gone. Good. So that is a way to do that. Right, let's I'm going to give a few minutes for someone to just have a look at, I don't want to say play with it, but if you want to do this, if you want to actually do it yourself, I'm going to give you some time to do it. But in the meantime, I'm going to just put out a poll to say my document manager reflects new columns. So once you're happy with it, you can just select yes, and then I know you are done, you are ready to go. But I just want, if everybody wants to have an opportunity to try that, play with it, and we will get that done. All right, I see a question that says, please repeat, oh my word, please repeat on how you added the columns. So I'm running the poll now just to see how far the guys are. So for the moment, I can't actually show it again, but I'm going to talk you through it. I see a question whether it's a right to work on a file with Sandrine. For today, I think it might be mostly fine. There may be one or two documents that we're going to actually work on that you might not have in there, but none of the work we're going to do today is going to be critical. We're not going to do any excessive audit work or anything. So you can also use Sandrine's file if you want to. Someone's asking for the link to the file that we are using for the training. So if you just go to the chat function, there is something, a link there that was posted at 9:30 this morning that says training manual download. You just click there and you can download it. So someone's asking, import the other file. You don't have to import this file. All you need to do is literally just open it up and it should open. If you're struggling with it, then please don't worry. Carry on in Sandrine's file. You can change these columns anywhere, so that's fine. It's not the problem. Good. Okay, so I'm going to just quickly have a look at where we are with the poll. So I've got about 50% of people that's voted that said they're done. So I'm going to close the poll now because we don't, I can obviously see that the majority of you guys have done this. But let me just hide the poll results. That doesn't matter. And then I'm going to show you again how to do this. All right, that's important. That's why I'm glad that I'm asking the poll, that you're asking questions, because that's the point of getting you to practice this so that you can do it when you get to the work. All right, I get a message from someone that says the link is not working for her to download it. I'm going to just ask someone from the consulting team just to engage with her, just to help her to get the link working. And then in the meantime, I'm quickly going to show everybody again how to change these column headings. Right, so I can stand anywhere on that line, that first line, that more or less where the name heading is. So not where it says blues, but where before it's blues. And I'll right click. And then because I'm in the column that currently shows planning by, it says hide by. But if I go anywhere else, it just doesn't have any hide. It says show. You can add to show items or reorder columns. So when I click on reorder columns, not restore, that goes to the default, reorder columns, that's then when I get to the table columns with the hidden columns on the right-hand side, the active columns on the left-hand side. And then all I do is, if I want to move something to an active side, I use, let's say in this case, uncleared. And I click the little left move button so that I can move that column to the left. It's gone to the right, to the bottom. If I want to move it up, I simply use the up button to move uncleared issues, in this case, up as much as I want to. Or, of course, down if I want to. If I don't want uncleared issues in the active columns at all, I can remove it again by clicking the move to the right button, and it will disappear. Once I'm happy with my setup, I click OK, and it will have all my columns as I chosen. And you can do this 10 times. Eh? So if you think, oh, I actually don't want this, or oh, I remember I forgot about that column, whatever, that's fine. You can add and remove columns as much as you want to. What I also sometimes do is I actually just move the width of the columns, which you really just, you just select the little border of the column width and just move it to the left if you want to, or to the right as far as you need to. Okay. Okay, so for the person who asked to be helped with that, I hope that's sufficient. Otherwise, just let me know. Good. I'm not going to necessarily start the poll again to show that everybody's done it, but I am going to just give 2 minutes for that person to just also try it. Good. Right. Everybody seems happy now. Good stuff. Fantastic. Next up, we've done the document manager. Now we're going to materiality. All right. So in an audit, we've said that when we're auditing, we're giving reasonable assurance. And what is the wording in our audit opinion? Our audit opinion says the financial statements present fairly or are not materially misstated. So there's always a consideration of materiality. Now, what is materiality? Or shall I say, when is an error or a problem or something considered material? We even mentioned material balances. Okay, so the client could have fixed assets being material or not material, or have sales being a material value or not material, and so forth, all right through to all the items on the general ledger. So what is materiality? So on the left-hand side, in general, something, material balance or a material mistake. It's something that's material if it will influence the economic decisions of users. What do we mean by that? So if there's an error in sales, in the sales value on the income statement, if it's smallish and it's, okay, fine, there's 100 Rand error, but, no one's going to really worry about it in a income statement of 100 million Rand. No one's going to worry about 100 Rand error. That's not material. No one is going to say, oh, I'm selling all my shares in this company immediately because they've got 100 Rand error in the financial statements. Or they say they are buying shares in this company or selling shares in the company because there's 100 million Rand and they didn't know about the 100 Rand error. Or conversely, they would have bought the shares had they known it's actually 100 million and 100 Rand. Or had they known there's a 50 Rand error in the bank statement balance reflected. They would actually have been so upset they would have sold their shares. They would have not lent the money to the business if they were a bank or a lender, something like that. Then that error is material. From the financial statement side, the balances themselves, we consider something to be material if a user is going to look into that balance, or, well, rather, if that balance is exceeding our material amounts. Why? Because if our amounts of materiality, which we'll discuss just now, are bigger, if our balances are bigger than those amounts, then we're saying if there is an error in that account or section that is bigger than our materiality, if there's an error bigger than our materiality in that section, then we need to find that error so that we can correctly report to the client. Because if we don't find that error in a material balance and there is an error and it would have affected the user's decision, well, guess what happens later on when that error actually comes to light? Then we're going to be responsible for not picking up that error. Okay, so that thing where they always say, where were the auditors? Right, that's where we need to make sure that we get our materiality values correctly calculated so that we can show, yes, we're giving reasonable assurance. We did not give absolute assurance. We have tested every material balance and we have obtained reasonable assurance. We got evidence, we got comfort over all the balances, and the untested balances that were remaining, well, they weren't material, so there couldn't have been any material balances, any material statements in there. Okay, so it's not just necessarily, oh, there's an error, why did the auditor not pick it up? We go through our materiality, which is not a thumbsuck number. We calculate it very carefully, but then it's up to us to show that we had actually done what we needed to. Okay. That's a whole long different topic, so it can get quite detailed. Good. So materiality, we have a number of different terms which we calculate. So the first one which we calculate is overall materiality. Now, overall materiality is almost like the overarching umbrella of materiality. That is the amount below which we say anything less than that will not necessarily impact the decisions of users collectively. So whether it is a shareholder deciding to buy into the business, or whether it is the bank deciding to lend or not lend money, whether it is maybe a trade union making certain decisions or not decisions. There's so many different decisions that can be made. So if we say anything less than this amount, that is not material. That's your overarching, your umbrella amount is your overall materiality. Okay. So from that then we go and we determine, we say that performance materiality is the next amount. Now, why do we have something different between overall materiality and performance materiality? Well, first of all, we could have taken overall materiality and always gone and tested for that balance. So when we're testing debtors, when we're testing bank, when we're testing salaries, every single thing, we're happy to accept errors up to that overall materiality. But the challenge there is that we could then very easily get to an amount of materiality that is, get to a combined error that is far exceeding that umbrella amount. Why? Because every time we went up to that maximum. So when we go and test individual sections, we actually use a slightly smaller amount, a lower figure that will still give us Comfort. Yes, we need to do a little bit more because our materiality figure is lower. We will accept smaller errors. But because we don't, and this is critical, because we don't test every single item in the client system, we are leaving a little bit of a gap, if you want, or an allowance for undetected misstatements between the overall materiality of, let's say, R1 million and the performance materiality, which we calculate to be, let's say, 700,000 Rand. Then every time we audit, we will go with a materiality, a performance materiality, in selecting our items, etc., up to 700,000 Rand. We'll accept and live with errors up to 700,000 Rand for the section, etc. Why? Because we're saying we're testing, we know we might come across errors up to 700,000 Rand, and then we'll hopefully accept that. But we are also leaving this gap up to the million, which is the difference, being the 300,000 Rand, leaving that allowance for undetected misstatements, things we did not identify because we sampled. We selected only material items. We did not do 100% testing. We did not test every single item in the client's ledger. Okay, so that's overall materiality, performance materiality as a percentage of overall materiality. And in the probe methodology, that is literally the percentage changes depending on your desired audit risk. We then also get what we call specific materiality. Now, specific materiality in probe is by default normally the performance materiality, but you can also make that a different amount applied to a specific section only. So let's say, for example, the client, I don't know, there's someone that's looking to maybe buy into the debtors book. So they're wanting to sell their debtors book to make it into cash, and someone's going to actually go and look at that debtors book. So now we are slightly more concerned. We want to audit those debtors just a little bit more carefully, a little bit more detailed, to make sure that when they look at the financial statements, when they look at the debtors, there aren't any misstatements for that specific user, which we know they're going to rely on the financials. We don't jump to every single user that we can think of, but if we have those specific bits of information, then we might say, right, so for this audit, a materiality of 100,000, oh, sorry, not 100, a performance materiality of a 700,000 is there, but for debtors, for checking trade receivables, let's go with something slightly smaller. Let's go with 600 or 550 or 500 or something like that. Okay, so that could then be your specific materiality, where you are changing your allowance for undetected misstatements, most probably because of a higher risk. So you're wanting to actually increase that allowance for undetected misstatements. And then the last term in our materiality topic is clearly trivial. Now, clearly trivial is not the same as not material. Clearly trivial is that we are saying that this is the nice word on our slide is inconsequential. This is saying there is no way that this error could ever be a major problem in this audit. Okay, that's how confident I am about this teeny tiny amount. So as you can imagine, it's a teeny tiny amount. The default in probe is 3% of overall materiality. Having said that, we need to be sure that we don't allow the total error on a balance to be more than the clearly trivial amount, the 3%. So let's say I don't want to sound ridiculous and say 10 working papers. Let's say I do 3 different working papers on the valuation and allocation of my trade receivables. One is for maybe my foreign trade receivables, my local trade receivables, and maybe another one for, I don't know, my long outstanding ones. I did a little bit of extra work there. If I find an error, in our example, we have R1 million being our overall materiality. So if my clearly trivial amount is calculated as 3% of $1 million, then what's that? 30,000, right? I hope my Friday morning brain is still working. So if I now have, I feel very uncomfortable about my brain this morning. Yes, it's 30,000. I just had to quickly check on the calculator. You know what they say about accountants? We always use our calculator. Okay, I've checked my sums. It's 30,000. So if I have one error on the one working paper being 25,000. That's fine, eh? It's less than overall, less than clearly trivial. It is inconsequential in the bigger scheme of things. If there's one error of 25,000 Rand on the one working paper, clearly for trade receivables, the trade receivables balance is probably about 5 million, so really no worries. Then we get to a point where we're saying, okay, so now there's a 25,000 error on the one working paper. On the second working paper, there's another 25,000 error for different clients. And on the last one, we also have an error of 5,000. So we've got 25 plus 25 plus 5. That brings us to 55,000 Rand error, all of them combined on the total value of trade receivable debtors for the same assertion being valuation and allocation. We're saying, are these debtors recoverable? Because the client wants to now go and sell their debtors book. And we know that there's an error of 55,000 Rand, which is more than our clearly trivial, clearly inconsequential, won't ever make a difference, 30,000 Rand hurdle. We are now exceeding that hurdle, that threshold. That says, sorry, you've got to look at all the working papers, all the errors in the same direction for the same sectional balance. And these are all three of them are showing debtors are not worth as much as we thought they would. They are actually worth 55,000 Rand less. I can't ignore that. I can't just say clearly inconsequential. So that means then that that is not a clearly trivial error because I've got to add those three together. Okay. Individually or in aggregate. So clearly trivial is an amount as a percentage of overall materiality. It is at, I want to say at individual error level, but we also need to always stand back and say, how does this compare to my errors for a specific section? All right, so that, without going into too much detail, those are the 4 types of materiality. Look, I can talk about materiality for a whole day. So I'm not going to talk too much about this in more detail. What I want to just quickly show you is the working paper, pre-engagement 1060, just to show you where these numbers pop up. Good. Right, so let me just increase the size for you. So a senior has already done this work, they've completed it, and what's important for us to know is that the overall materiality is 1 million. I just want to see that it is, yeah, there we go, the audience view is synchronizing. That's 1 million in line 2. Line 4, performance materiality, in this case is 800,000 because our desired audit risk is low, so that's at 80%. And there's our clearly trivial 30,000 Rand. Okay, the performance materiality is calculated in a different document because that is no, not the performance materiality, the specific materiality is calculated in a different document because that is done per section. This is the overall section here. Good. Right, next up then, some audit terms. So first of all, misstatements. We've spoken about errors. What are errors? What could be misstatements in the client's financial statements? So they can either be inaccuracies. Okay, so there was an error in the calculation. 5 times 5 is 25, but they wrote 23. Okay, simple things like that. It can be that where somebody had to record, remember that input screen that we showed earlier on, where they had to record the number of items bought, they typed 5 instead of 15, they typed 10 instead of 20 or 100, those ones, processing information, gathering information. Omissions or stuff that's just not there, especially in terms of disclosures where people don't disclose the information, that's also a misstatement because it should have been there and it's not there. Incorrect accounting estimates because we are misinterpreting facts. So it could be that the client thinks, oh, the economy is doing so well in South Africa, the interest rates are definitely going to go down in the hectically in the next few months, and the economy is going to pick up, and so therefore we are expecting this amazing return on our trade receivables or this or that or the other thing. And actually, they're just completely missing the point because our interest rate is increasingly high. Well, we are expecting a decline, but not tomorrow or next week. And our economy, our users, our public is struggling to actually pay back their loans, to buy stuff. So people are not going to go off and buy lots of their luxury goods that this client has, things like that. Judgments of management that is maybe unreasonable. Again, maybe they are hoping for better economic conditions, or they are hoping for better repayment terms or something, which is not necessarily realistic. Or if the client has incorrectly or maybe inappropriately selected accounting policies, and then they are applying those incorrectly. So that could also be a problem. And then just any other inappropriate classification. So classifying something that they bought as maybe as a expense, let's say stationery, when in fact it's not stationery, it's maybe maintenance. Okay. Or it could even be where they are classifying it as an expense, when in fact it should have been an asset that's written off over a few years. Why would they want to actually expense it or record it as an expense? Well, because maybe they want to claim it for tax purposes. So they're trying to put it through as an expense so that it doesn't have to be deducted over multiple years from a tax perspective. Or if they are aggregating, grouping information together inappropriately, so they should actually be showing stuff in a little bit more of a broken down way for clients, for users of the financial statements, yet they are putting them all together, potentially to hide something, okay? Or maybe they just don't know better, but potentially to hide something. And then the other one is where they break it down in too much information, well, it could be to really try and be inappropriate or show the wrong things or anything like that. But it could also be that they just don't realize that if they actually break it down into that much detail, then the users of the financial statements will actually lose focus of what it is that they should be focused on. And so that then just leads to users actually not getting the gist of what they should have been seeing or focused on. All right, so how do we find these? Well, simply through doing work, audit work. So we've got to do the audit work in order to be able to see where these mistakes are. And of course, these are only when we come across them, that we know about them, that we've identified misstatements. So yes, we find a few of them, but hey, guess what? There could be more of them and we wouldn't know of them. Remember earlier on, we referred to leaving that gap for undetected misstatements or an allowance for unidentified misstatements. Well, those are then these types of misstatements that we haven't come across because we didn't test everything. All right, that's the word, the fancy word, I almost want to say misstatements. And then we also use this term, which is called overs and unders. That's often a word that we use when we refer to misstatements. And that is really because we are talking about overstating a balance or understating a balance or a transaction, of course, as well. So over is probably where we are showing trade receivables at a balance of 5 million, but actually there's about 300,000 Rand of debtors that are not going to actually pay us because they've all gone into liquidation. And so therefore, we actually shouldn't be showing 5 million Rands worth of trade receivables. We should only be showing 4.7 million. So then we have an overstatement of trade receivables. Okay, so that's where the shorthand overs and unders come from. And then if we look at some other terms, things like the schedule of audit differences, schedule of overs and unders, that's a working paper that we use to basically accumulate all of these misstatements, all of those that are not clearly trivial. All right, so to go back to the example of clearly trivial from earlier on, if I have a misstatement on one of the expense working papers, for example, that is showing, oh, you know, they calculated the VAT incorrectly on this invoice and they left out 50 cents. Okay, they claimed 50 cents too much, or they didn't claim a 50 cent or whatever, something like that. And that's clearly trivial, inconsequential. So those ones won't be on the schedule of audit differences. Having said that, there is a requirement in the standards that says, if you come across an error, always ask yourself, what are the chances that the same thing could have happened in other instances. So this is maybe not the best example that I'm using about the VAT, because my mind immediately says, hang on, if they got that VAT recording wrong once, how many other times did they also get it wrong? So you're probably going to go and expand your testing on that, just to make sure that the 50 cents example that I have now, that's really a silly example, doesn't become a 50,000 Rand over the matter of a year. Okay. Hopefully you can use some electronic tools to test that quickly and not and not have to test them manually by hand or calculator or anything like that. Please work smart. Eh? All right, so that's your schedule of overs and unders. Everything that's not clearly trivial goes to your schedule of audit differences. We also sometimes refer to them as unadjusted. Now, the theory is that we should list all of our errors on the schedule of audit differences or overs and unders. And then at the end, we go to the client and say, these are the errors we found in the audit, please fix them. Practically, it doesn't always work like that, because practically most clients prefer to rather fix the stuff as you come across them on the go, so that they can actually fix their accounts and get them right and get the financials sorted by the time you're done with the audit. So it's possible that you, in some cases, and this is where you really need to take the lead from the audit manager or the senior, in some clients, they're going to prefer to fix the stuff on the go, and you will give them the error, show them the error. Once they're convinced of it, they'll fix it, and there you go. In other instances, it might be that you put the complete list together and then ask them to fix it. Or you only go and ask them to fix the material ones, and they leave all the immaterial ones, or the ones that are less than your performance materiality, you leave on the schedule of audit differences. So there's a variety of ways. But ultimately, at the end of the day, probably then a matter of saying unadjusted differences will probably remain on this schedule of overs and unders. The three classes of misstatements that we have: factual misstatements, so that is where there is no doubt. This is the mistake. I can see on the invoice you treated the VAT incorrectly. I can see on the invoice there's the calculation was done incorrectly, something like that. Okay, so the example you can see there, the processing done at 100 Rand, but the invoice itself is 150. Clearly, there's a factual misstatement of 50 Rand. Then judgmental is not where I can always convince someone of the error. So factual, those are often the ones that's easy to convince someone. Those are the ones that are easy to prove, and probably also the ones that's going to be fixed most of the time. The judgmental ones is where my opinion or my judgment that I make about something, let's say the provision for bad debts or the provision for recoverability of trade receivables, using the longer words, I think it should be 1,700 Rand, but the client thinks it should only be 1,000 Rand. Now, they've applied their judgment, I've applied my judgment, and it's difficult now to say, well, why is mine better than yours? Why is mine the right one and yours is the wrong one? It's really difficult to say that. So, of course, we then go and analyze how does the client get to their 1,000, and we see where's the difference, where do we believe the client might have made a mistake potentially in their judgment, in their assumptions, and then try and convince them that that judgment, or that rather that assumption, is wrong. Okay, so judgmental ones are more difficult to convince the client to fix. So just so that you know the difference between those types of mistakes: factual, no doubt; judgment, well, my judgment against yours. And then the last one is the projected mistake. Now, this is basically our best estimate of what is wrong in the whole long list of expenses or trade receivables or fixed assets or the population, the list of items that we've tested. This is the result of having done or selected a sample of items and tested the sample. And now I need to know, well, if I have, let's say, purchases of purchases of stock. So we made 20 million Rands worth of purchases of inventory. And obviously, you and I can't go and test every single one of those purchases of inventory. So we go and select a sample of items. And our sample, just a pure sample, so not a random selection or things like that. We did a proper systematic selection for sampling. And that sample was When I say the inventory was 20 million, so the sample of items we tested was 2.5 million. Okay, so you can clearly see that I have not tested nearly enough to really make a conclusion about all 20 million. If I tested 18 million rands worth, then I could have said, well, the remaining 2 million, you know, I'm maybe not too worried about it or something like that. But you can clearly see testing 2.5 out of the 20 million, I need something more than just testing the 2.5. So if we've done a proper representative selection of that sample, we can conclude on the full 20 million by projecting the findings that we found on the 2.5 to the total 20 million. So essentially what we are doing is we are taking the population, we tested 2.5 million, and let's say we found an error of that 2.5 million, let's say we found an error, I want to make the numbers biggish so that they don't, not too silly, of 150,000 rand. Okay, so 150,000 rand error in the 2.5 million rand inventory selected for our sample. Okay, so I'm actually going to quickly just jump to an Excel sheet. I'm going to open a new one. So the total stock is 20 million, and our sample of stock was 2.5 million. Let me just make the slide slightly bigger. Okay. Now, if our error in the sample is 150,000, okay, why is my thing not coming out nicely now? Good. Then I'm going to project and say, well, I tested the inventory of purchases for, sorry, it's not stock, it was purchases. I tested 2.5 million. I found an error of 150,000. So for me to conclude on purchases of 20 million, I need to project the misstatement. So these ones, firstly, we call factual. Okay, I actually agreed the amounts to invoices. I know for a fact those misstatements were because they recorded the wrong number of items, or the price was wrong, or whatever the case is. That's a factual mistake. So what we're going to do now is we're actually going to use a little formula that says your projected error equals the error itself divided by the sample. So you basically get what they call an error rate. Right? So what is our error rate? We take the error divided by the sample, and our error rate is basically 6%. That's quite high, but it's now just for the example. Once you've got the error rate, then your projected error equals your rate multiplied by your, let me say rate multiplied by your population. So then we go and we say, well, the population is 20 million. So multiply that by the error rate, because we say, sorry, now it doesn't want to actually F thing. We say that if 6% of the sample items were wrong, and the sample selected was representative of the population, then surely 6% of the population must also be wrong. So what is our projected error? Let's go back to the slide. What did the slide say? It is our best estimate of the misstatement of the whole population, which we project after identifying the misstatements in the sample tested. So then we can get to a point of saying, well, my best estimate, having tested 2.5 million of the 20 million purchases, having done a proper sample on that, is saying that there's probably a mistake of 1.2 million rand in the total purchases of 20 million. Okay, I'm really hoping that you never find this big type of error here. So let's say maybe I just found a 55,000 rand error on the 2.5 million. Then my error rate is 2%, and the total error on purchases is only 440,000. And then I go and ask myself, how does that now compare to my overall materiality, etc., etc., etc. Okay. Something that I do want to point out is the difference between the factual errors, which I'm going to mark in yellow. I hope you can see them properly. Okay, and the projected error, which I'm marking in. Let's mark it. Oh, that's a horrible green. Let me get a better green. Okay. The total error, projected error, is 440,000. But the part of the total error that's really the projected is the difference. Because remember, that 2.5 million is part of the 20 million. So then 55,000 is part of the 440,000. So if I really want to go and say, well, the total error is 440, then the factual, oh, goody gracious me, my typing skills is leaving me today, 55,000, and the actual projected error is then the difference between 440 and the 55. And I don't know why my mouse doesn't want to do that today. So the projected error is 385. Oh, man, sorry. 385. Okay, that's just a little side note. If I was standing in your room and I had a whiteboard, that would be the scribbles I do on your whiteboard now. Good. Right, ladies and gentlemen, let's move to the materiality screen. The picture for us there, that's just a visual showing the difference between the overall materiality, the performance materiality, that one then leaving that gap for undetected misstatement. Performance materiality and specific could be the same amount, but you can also have a specific materiality different to performance for your section. Any misstatements here in this gap between clearly trouble and performance is then accumulated on your schedule of order differences. These little ones per section, if they are clearly trouble, they don't go to the schedule of order differences. Good. Right, so that then actually again brings us to a little comfort break, because I know you've focused very, very, very hard and you need to just wake up and take a quick comfort break. So my clock says it's 11:15, 11:15. Let's take a 10-minute comfort break, and then we've still got a lot to get through. So then we are going to resume again at 11:25. Okay, we are finishing at 12 o'clock. We are going to finish at 12 o'clock. So let's go and have a look at that. Get a cup of coffee, get refreshed, and then we'll do the last 35 minutes. See, time to get going again. I think I might have said, no, I said we have 35 minutes. So yeah, I thought now for a second, I said we're back 11:35. I said 11:25, then we have 35 minutes to continue. Right. Whew. It's a nice break, it's nice, but after this, we're going to have a nice break for the afternoon. Have a lunch or whatnot. Good, so let's continue. Again, I'm going to hide my video, but I did just want to show you that I am here. I am looking, and we are busy. So I've had a few questions in the break as well that I've answered. So please, 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 if you've got questions, feel free to pop them in and we will address them. But if you don't, then that's also fine. But I want you to be able to have the questions answered. Good, right, so next thing, we spoke about materiality before the tea break. Now we are speaking about lead schedules. Now, what is a lead schedule? So essentially, a lead schedule is almost like a summary or the part that you are looking at for the section that you're auditing. So the client gives you the trial balance. You import the whole trial balance into Caseware, as you may have done on Wednesday rather. You map that, so you tell Caseware, the software, what each of these accounts from the client's records belong to which sections do they belong. In the screenshot here, use my spotlight, we've imported the client's trial balance and mapped it and told it that all of these, told Caseware that all of these accounts are part of the cash and cash equivalent accounts. Okay. So this is our lead schedule, which is basically just like a little zoom in of or magnifying glass of what's essentially going to be disclosed in the financial statements in any case. All right, so there you see the 4920. Don't worry too much about the liabilities, which is obviously on another slide. Whereas last year, where we just had assets, 8466 is the same as what is on the lead schedules. That same total balance of assets is also the same of what we have on the current asset side. So that's essentially the lead schedule. And again, I think you did work with them probably on Wednesday, so hopefully not too new for you. Something else to just note about the lead schedule is that it is an automatic document. So you can know that by looking at this little button there. And I actually showed you that button earlier as well when we were busy on the Caseware file. And there you have that little automatic document picture for the cash and cash equivalents lead schedule. This is exactly that lead schedule as well. Okay, so what do we find on the lead schedule then is basically this summary of what goes on in this account. Okay, and they are given in the overview of the layout, the audit of the financials, the line items, etc. As you can see, cash and cash equivalents is cash on hand and the bank balances. Good. Then we have the referencing that I want to show you. Now, in the olden days when we had hard copy files, we literally paged. I didn't bring a file with me today so that you can hear the pages as you had to page through them. But every page in the file had a number. And as we wanted someone to know to go to further in the file, to the front of the file, where can I find the paper that actually reflects more detail or a summarized version, where's the lead schedule, etc., reflecting the work here. For each of those, we had to include a reference. And there was a lot of rules on the hard copy ones. When you had, in our firm where I did my articles, we had to do it on the left-hand side if the document was to the front of the file, on the right-hand side if the document was to the right of the file. All of that stuff has fallen away because we are working with electronic files. It's fantastic. In fact, your manager's not going to go with pages anymore. He's probably going to use a fantastic thing which we know as a hyperlink. Those are the coolest because you don't have to page. You just click on this blue little thing. That's a hyperlink, and chooks, it will go and open the working paper, in this case 421, and he will be or she will be able to see what's in this document. So the way that I do this is on the lead schedule, so this one being our lead schedule, I will indicate that the work performed on this balance is done on 421. Manager clicks on the hyperlink, which I've included for him or her, and it takes them to the working paper that opens up that Excel and they can work there. Fantastic. If you have, and I want to mention it now and then, I just want to say not work on that or talk about that again because I know not everybody has Connector, but you can always have hyperlinks to other documents from a case view document. You can, however, only actually reference back to it through a hyperlink or reference to a specific cell in an Excel sheet, for example, if you have a Caseware connector. So that's a little add-on, nice to have, helps you with efficiency, but definitely doesn't hinder you if you do not have that in terms of referencing. What is important, though, is that it's always important to show where an amount or a point or anything has also been addressed somewhere else in the file. I must almost be able to open up your file. If you think about a hard copy file, open that file at any random place, just make it fall open and say, oh, I'm on this page now. This page shows me, what shall it show me? The fixed asset register, the payroll reconciliation, maybe it shows me the bank reconciliations, working paper. Where does this come from? What happened before in the file? What happened after this in the file? In this step or this a journey of us of getting audit evidence. Now, maybe just a little side thought here. I always like to think that our audit file must almost be like a storybook, okay? That has a little golden thread that goes from start to finish right through to the story. At the beginning, you get to know the characters, then there's some drama, some things happening, some risks identified. Then there's a lot of stuff that happens, field work things. And right at the end of the story, there's normally some resolution of the drama that had built up. There's some conclusion. Hopefully, there's also a happy ending, being our audit opinion. So that's almost how I see an audit file. Be it realistically or not, I don't know, but that's how I like to think about an audit. And so the story of mine needs to be able to flow, both if I get to a point to say, how can I determine what happened before Chapter 5, and how can I follow through from Chapter 5 right through to the end? And that's exactly what the references do for us. So in in Caseware, on our computers, we can also do this. So before, of course, I had a working paper, I had a piece of paper, and I wrote there with a red pen, a green pen, or whatnot. That's how I did it. Now we can use the electronic version of the file to help us with this. Okay. So I'm going to actually ask those of you that has the Caseware file open to go to the section 631. I'm going to show you just now how we're going to do that so that we can just do a quick referencing exercise. I just want to show you how to do that. We are going to do this again and again and again in our cash and cash equivalents section whenever we audit all the sections in the future. Cash and cash equivalents, payroll, all of those ones, we will do this again. But I just want to quickly just show you. So, let me just take away my spotlight. So in our sections, we are going to find section trade and other trade and other payables. And I'm going to open the lead schedule 630. Okay. And so now that's already opened, and I'm going to go back to my document manager and say I also want the Excel document, the list of accruals referencing exercise. Now remember, this is just an exercise document for us. Okay, so it's not a complete, perfect, beautiful working paper with everything that we need on a working paper, not at all. It is really just there to help us to do the work. Okay, that's where I did my projected stuff earlier. Here's our working paper that we are going to use to reference. When we work on cash and cash equivalents, we're going to talk about all the contents that's needed in a working paper to make it a proper working paper and so forth. But for now, for the referencing, when you reference, every single one of these amounts needs to have a reference for us. So this is again where I'm going to split my screen using the Windows right and the Windows left. So I have my Excel here on the right hand side and my trade and trade payables on the left hand side. So I use Windows right, Windows left, and that's how I'm splitting my screen so that you can see both of my screens as I work through this. Good. So I'm going to go and say, well, trade payables, accrued expenses, the client has accrued for a total of expenses of 626,000 on my working paper, which is numbered 631. How do I know that? Okay, I go back to my document manager and I can see that the properties is 631. And my trade and other payables lead schedule is 630. Now that is also reflected here in the purple. Just give you a chance for it to actually synchronize. So there's my lead schedule, 630. Okay. What we would normally have to help us to remember is we'll actually have a document number here. So I'm going to just write here 631 so that we can all remember this document number is actually 631. I'm going to make it the same, not that, make it the same purple as it is on the lead schedule, just so that we can remember that's the document number. Okay. Good. So I'm going to tell the person when you open the file and you land on the Excel working paper, where did this amount 626,093 come from? Well, what actually happened in this golden thread story of us is somebody had, to the left of our screen, imported the trial balance into Caseware, mapped it to accrued expenses, and then someone said, let's go and do a working paper on accrued expenses, and created the working paper, which is on our right-hand side, to show what is accrued expenses made up of. So you can see again, I've got my lead, my lead schedule on the left-hand side, because in my mind, that's what happened before we got to the working paper. Okay, just also so that you can see the before and the after. It doesn't actually make a difference, but it works for me to remember the timeline. So I'm going to say in the lead schedule, I'm going to say include a reference here. So right click, sorry, let me start again. Right click, include a hyperlink reference because I would like it to just pop up on the other side, or you can include a manual reference. I like the idea of a hyperlink reference, and I can label it. Well, let's just make it 631 actually. I can include the hyperlink to the document. Or I can say, actually, no, I'm going to just do a manual reference or document reference, new document reference, because I'm going to reference it to the document. Where were we? We were in trade and other payables, and I want to refer from the lead schedule to the Excel sheet. So there's my hyperlink now. If the manager was to work in the Excel sheet, in the lead schedule and say, hey, where's the work done on 626,000 rand? They go, oh, I see it's on working paper 631, which is the list of accruals referencing exercise. And my trainee, Larisha, created it on the 9th of February. Click on that, and it's going to go and open the Excel sheet. Okay, obviously it's not going to open it now, it's already open. That is now the reference from the lead schedule to the working paper. I don't have Caseware Connector for today's purposes, so how am I going to reference the working paper back to the lead schedule? Well, it's as fun as saying we're going to include 630 and make sure that the reference is in red. Okay, references are always in red, so we'll always make them red. Then the manager doesn't think, what is this 650 rand that this trainee wrote here? No, that's not what I did. I was referencing that amount to say, go look at document 630 for where this amount comes from. Okay, that's referencing in short. Just so that you can say you've heard of the term referencing. We will reference and reference and reference lots of times as we audit the other sections. Right. Good. Someone's asking me for the referencing again, so that's I assume is in the case we're in the lead schedule. I'm going to just include another one. Let's go to the sales. Let me just check that. What are you seeing? Yeah, there we've got that coming in. Good. So when I want to reference from a lead schedule or a case view document to an Excel or anything like that, I will right click and I will say include a new document reference, to include a reference to that document that's already in my Caseware file. So that's important. I can't reference to an imaginary document. It must be in my Caseware file, otherwise it's not going to pop up. Okay, so that's what I select first. And then it basically gives me a list of all the documents that is already in my Caseware file. In this case, I will now then, what's the word? Scroll, almost wanted to say synchronize. Scroll to the relevant section. In our case, I know that we are working in section 600, current liabilities, trade and other payables. And I want to go to the Excel document that has the reference list of accruals. I'll tick that and say, okay. And once I click OK, the hyperlink appears and that is then included as a reference. On the Excel sheet, I literally typed it in manually and made it red. Okay. I think that's addressed most of the questions that we had coming up from that. Good. Next up then, remember we will do this again next time. We're going to do a whole section for cash and cash equivalents. So we're going to do lots of lekker referencing. We're going to have fun. That was referencing to tell someone where to go to find a document or an amount. Now we are going to include tick marks. Now tick marks are basically a way, a shorthand if you want, a code to say what evidence did I get on this item, on this thing, what did I do with this amount, with this piece of evidence. Now the standard Caseware tick marks that's already there is already included in the screenshot, and it's possible that maybe the firm may decide to change them. So there is a way in which you can actually change your tick marks globally, at a global level, at a firm level, or even at a file level. So let's say the firm that you are working in has a standard tick mark for, I don't want to say agreed to bank statement because that one's already in case. Let's say, for example, subsequent bank statement. Okay, so the bank statement in the first month after the financial year end. That's the one that I want to include. Well, then the firm can include tick marks, set up specific tick marks, either at the engagement level or at the firm-wide level. That's not for me and you to worry about today. Your firm would have done that, a Caseware Champion or someone would have done that for us. When we open up Caseware, we will just get the list of tick marks to tick. All right, so again, I'm going back to Caseware, and for that one, we are going to, I'm actually going to not work in trade and other payables. If you want to follow me, we are going to go to 430, which is trade and other receivables. Okay, 430. If you open that section, again, the lead schedule there, 430. If you desperately want to just work on the one that you've got open, that's also fine. Any lead schedule should work. Maybe you've already seen these also, maybe where you were involved in another section or in an audit earlier. So tick marks then on trade and other payables. I want to include a tick mark. So again, for that section that we've got there, 24, almost 25 million, right click and say new tick mark. Click on that and it will then give you the list of options that have been approved for your firm. So here, for example, we've got agreed to bank statement, calculated, agreed to the general ledger. One that I am quite passionate about is, have you actually agreed this amount to the final financial statements? It's one thing for us to work with the trial balance, but we need to also check that it agrees to the financials. So I've gone and literally checked the client's financial statements, and their financial statements are showing the accounts receivable balance of 24,659, blah, 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 blah. I'm going to put the tick mark in agree to financials and click, and there you might or might not be able to see that I've added a little tick mark to my file. You see there's like a tiny little green thing there. Okay. What is important in this case is that we have to use, what's the right word? We have to use tick marks that is known to everyone. So if I do a tick mark, I'm going to go back to the Excel one we had earlier on. If I do a tick mark on Excel, I have to have a legend that explains to someone what it is I did. If it's something that's so unique and has such a long explanation, or something that, well, I'm only going to use it once, then I might as well just write there, I have agreed this to the contract. Or I might say this costs correctly or something. But throughout the file, we're going to use costing so often that it makes sense just to have a little code tick mark to say this is cost. Okay, and so that's also why we use tick marks that is acceptable to the firm as a whole, or to the audit team if you want at file level. Everybody uses the same tick mark that means the same thing. I can't go and use 1s and 2s and 3s and 4s, and you want to use little stars and moons and I don't know what else. Then the poor manager is never going to know what's happening. So we tend to go with consistency and all use the same tick marks. Okay. And then, of course, the explanation for the tick marks. So that is then just, remember on your Excel sheet, you always have the legend for your tick marks to explain what your tick marks mean. On the case view documents there, you're using the automatic ones from Caseware. So that should already be explained then in there. Good. Back to our slides. That was the tick marks. Then notes. Now, sometimes you could get stuff that the tick mark itself doesn't say enough. And in those cases, we will then get stuff like we have now on the slide, where we want to explain things in a bit more detail. We want to give more information. And so there, we might use things like what you can see N1. Okay, so then I'll say, oh, no, yeah, I need to write the story N1. And I'll go to N1 and say the accrual is based on the blah, 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 and we're happy. We've got audit evidence, we're comfortable with it, but I can't just say agree to invoice, agree to statement, agree. I can't just say that because there's more than just that. I needed to calculate an average value and so forth, so I'm explaining that. In other cases, the S, that's just a tick mark. Tick mark says agree to statement. I've included it in my legend, happiness. Maybe I use doc, maybe I use maybe I use, I don't know, people have all kinds of different tick marks, and then explain it and say agreed it to the invoice. Okay, but note, like for example, the N2, N3, N4 often, or you can use others also, is where we then have notes, again, explaining it, but there's, as you can see, a lot more to write than just what we've had in the legends for the tick marks up to now. Good. That's then enough for now of the notes and the tick marks and the legends and all of those things. Let's move on to some auditing terms again. These are pretty much generic auditing terms, but there is also a little bit of a probe audit flavor in there. So I've mentioned things like relevant assertions, or when do we do work when we've got an assertion with a risk, things like that. So ISA 315, which is the standard on risk assessment, says that an assertion will be a relevant assertion when it is an assertion about a class of transactions, which is like your sales or your purchases, or an account balance, your trade receivables, your inventory at year end and so forth, or a disclosure item in the financials, is relevant when it has an identified risk of material misstatement. This is determined before considering controls. Okay, so what is an identified risk of material misstatement? When you have identified a risk to an assertion. Okay, so you say, there's a risk of completeness. This may not be complete. This may not be accurate. One of the assertions are not met. And we're going to talk about assertions just now. And then another term is the Scottabody, if you want, or basically a significant class of transaction, account balance, or disclosure. So that is also a term from ISA 315, and some of you may have studied that and know that already. Maybe you've got a better word than Scottabody, but that's what the IAASB refers to. So that is really just a class of transaction, account balance, or disclosure for which there is one or more relevant assertion. And what is a relevant assertion? A risk has been recorded. So in other words, a significant class of transaction, account balance, or disclosure is one of those where we have identified a risk that one of the assertions may not have been met. Okay. Then there's also that rule that says when I have a material section, a material balance, that could be an account balance, class of transaction, or disclosure. So it's material, it's qualitatively or quantitatively material. And we have not identified a relevant assertion, so we haven't identified a risk to one of the assertions, but it is material, then we must do work on it. Right. So what do we see there? There we see that the auditing workflow will be as follows. When a risk is identified and raised, there will be a relevant assertion. That's the green one. Just looking at my spotlight. When a risk is raised and identified, there will be a relevant assertion. Let's say I'm concerned that not all sales are recorded. Then I have completeness of sales as a relevant assertion. Then I'll have sales as a significant class of transactions, account balance, or disclosure. The standard says you must then do a system description. Okay, so we must obtain a description of how the client accounts for this. And we then determine how we're going to address this risk of completeness through performing field work. Good. If I do not have a risk, but it is a material section, then I will perform a so-called stand back and say, have I really properly identified, done my risk assessment procedures, and there's really no risk? Okay, yes, I have. There really isn't any risk. Let's go and select an assertion. I select an assertion and I go and determine what is the most appropriate one. That's where your seniors will get involved. And they'll say, right, so for this expenses, general expenses, we're going to go test accuracy, cutoff, something. Okay, they're going to choose the appropriate assertion. And then for that selected assertion, you will go and do field work. Okay, so I've mentioned assertions a few times. What are assertions? So the standard auditing standards have a lot of assertions, and in probe, I think the most important thing for you to notice that in probe, the assertions are grouped. Okay, so the definitions are in your slides. I'm not going to read them word for word for word, but it is maybe just important for you to know that they are grouped. So maybe the most obvious one for you to note is that we have a group called existence and occurrence. Okay, so what we basically, maybe just to understand assertions, I had finished my training contract before something actually clicked in my brain to make me realize what is the word assertion. So assertion is when the client says, dear auditor, I have prepared my financials and they are right. I have done beautiful financials. You can just go and check them quickly. There's not much for you to do. You know, I know you auditors always do too much, but you know they're right. I've prepared them. they write. They assert, they make a statement that those financial statements are right. We then go and basically break up that statement into little teeny tiny pieces. And we say, well, we can't test, are they right, yes or no? We need to break them up into pieces. And we go and we identify different assertions. Those assertions, those statements then is, the client says all transactions are recorded. Are all transactions recorded? Are they complete? All assets are recorded. Are all assets recorded and complete? And so forth. Okay, so you can have a look at the detailed definitions of the assertions if you've never come across them, but that's essentially what assertions are. Assertions is the client making a statement and we going and saying, well, is that statement actually appropriate? Let's go and test it. Because I can test, are all transactions recorded? I cannot test, are the financials correct? Okay, it's much easier. So there's then just that split. And then the lovely definition for accuracy, valuation, and allocation. It's quite detailed, but it makes sense to have it all together. Maybe just something to point out is that classification is also included in this grouping. People often forget about classification. In previous versions, quite a few, I think 2 years ago or so, cutoff was still included there, but it's no longer included. It now has its own separate class or separate assertion. So please bear that in mind as well. And then presentation and disclosures with regards to the financials also has a separate assertion now. Okay, when we go and test these items, we test financials and we need to get evidence of whether all transactions are recorded. We need to get evidence of whether, when the client says they have all of these assets, do they really have them? Well, they've recorded them in the financials. How do I know if they are legit? So we need to, in some cases, start from the financial statements, the assets that's recorded, for example, and go and check, are they actually there? Are they on the floor? And in other cases, we say, well, how do we know if all sales are recorded? Well, I can't go and say what has been recorded, are they all recorded? I need to start somewhere else. And that is where I then go and say, what are all the sales that should have been recorded? What are all the liabilities that should have been recorded? What are all of the whatevers that should have been recorded? And let me go and follow through and see if everything has been recorded. That we refer to as the direction of testing. And if we go from the source document to the financials, we go from the orders, from the delivery notes, from outside of the financial statements, from outside of the general ledger and the sub ledgers. Then we go from there and we go to the financial statements. That's when we are testing completeness. However, when we go from the financial statements and we test for evidence that that stuff is correct, should have been there, is still existing, etc., then we're actually testing overstatement. That's when we're testing occurrence, existence, etc. Okay. Guys, I'm aware that we've got about 5 minutes left, so I've got a few last points that I want to just highlight for you, and we will unpack them a little bit later on in the subsequent sections as well. So essentially, what is remaining is that we need to also document our audit evidence. Now, I'm going to say something to you today, and then I'll tell you why. Well, you know, I'll tell you something about that statement. There's a statement that a lot of people like to say, and they like to say, when something is not documented, it is not done. Okay, it's a strong statement to make. So what they're basically saying is that if your audit file does not have the item documented, there is uncertainty as to whether you have actually done it. You cannot prove that you have done something. Now, of course, at the same time, you can write any nonsense on your working paper and never do it. Okay, that's unethical. But there needs to be a balance in your working papers to say, have you documented everything that's required for a person, your manager or the partner, maybe an external reviewer, to really be able to see that you've done the audit in accordance with the auditing requirements. And so the documentation requirements, I've just got 2 slides on that, says that we need to document the nature, the type of work we've done, when we did it, and how much of those items we've tested, what we've done for all audit work. And in documenting that, we need to, for example, document identifying characteristics of the items. That means if there are invoice numbers, I need to document the invoice number for the item, because then any other person can come and identify what I've tested and re-perform the same item. If I just say I tested 5 invoices, well, which 5 did I test? Because you're going to test other 5. But if I go and I say, this is how I selected the invoices, and I came up and tested invoice 1, 2, 3, 4, 5, 6, and 7, 8, 9. You can go firstly and say, have I selected the correct ones in this method? Did my method make sense? Did I use it correctly? And secondly, then if you also came to, now I can't remember my numbers, 1, 2, 3, 4, 5, 6, and 7, 8, 9, then you can re-perform it and see if you come to the same conclusion as I do. Right, so that's an identifying characteristic. Who performed the work? You'll see also when we do the fieldwork sections, every time you do something, you need to sign off on it so that we can know you did that work. Basically, every time you are taking responsibility for the work that you've done. And then, of course, when the manager partner reviews, they also need to document who reviewed it. And in both of these cases, the date and on which they've completed that. Another point just to mention, and again, we'll go into more detail when we start to work on detailed work, is in terms of when I'm using information that was prepared by the client. So for example, the client gives me a list of their trade receivables, of their debtors. The client gives me a list of all their related parties. These are the ones. How do I know if it's right? How do I know if they haven't left anything off? How do I know if they didn't put something on there that shouldn't be on there? I don't know that. So in any of those cases, I need to ask myself whether this list is appropriate. So the standard ISA 500 on evidence, paragraph 9 says, when using the information produced by the client, as the auditor, we need to evaluate if this information is sufficiently reliable. It's not saying distrusted, mistrusted, never rely on it. It's just saying, ask yourself, does this make sense? And obtaining evidence about the accuracy and the completeness of the information, and evaluating if it is accurate, sufficiently precise and detailed for what you want to do with it. So in terms of accuracy and completeness, well, if the client gives me a list of the trade receivables, I can go and check the trade receivable ledger and check and see what's the total value of trade receivables recorded in the general ledger. Well, 5 million or 25 million or whatever we had earlier, and see, well, the list that the client provided me, is that also 25 million? If they give me a fixed asset register in Excel, for example, and they tell me the carrying value of their total fixed assets is whatever amount, well, does that tie into what's in the balance sheet? Of course, I'm going to then also check the formulas, but that is some of the basic things we need to do. And this here is where we need to make sure that we actually document that we've checked those things. Okay, so there's a bit of information that we need to just make sure that when we get to the detail of working papers that we include that. Good. Next up is the audit conclusion. Now, audit program conclusion, we haven't actually dealt with that much. We will work on that a bit more in the Excel, in the auditing cash and cash equivalents. But essentially, there's this long list of questions that we need to ask ourselves as we complete work programs. So we'll ask ourselves, for example, it might be a bit small for you to see, but let's say, did you, as a result of your procedures performed, did any of the results indicate that there are fraud or fraud risk factors that could have an impact on your audit? If you say yes, then you need to provide more information. There might be a comment needed, something to document. If you say no, well then great. We didn't identify any fraud or fraud factors in this audit section of whatever you were auditing, cash, trade receivables, etc. Next question. So there's a lot of stuff about related parties, going concern, reportable irregularities, non-compliance with laws and regulations, lots of these terms. So a lot of firms, and I'm expecting your firm would also have ways and documentation and policies on how to treat many of these things, like, for example, report to irregularities, non-compliance with laws and regulations. So your firm will probably have some policies somewhere in their system of quality management, in their ethics manual, on how to deal with this. And I'm expecting they'll probably be giving you guidance or training on that in due course. Okay, so we'll complete this conclusion when we are working through each of the work programs as well. But just to say that that is actually also tying in with our completeness, with our conclusion and our documentation of our evidence. All right. And that is then basically bringing us to the end of today's session. Before you log off, I have a few points still to make. I want to include the post-course assessment. So I just want to quickly add that in there. But in the meantime, if you have any outstanding questions, I'm not running away just yet. So you can still post questions if you have any of them. And then maybe I should just also quickly show you what other sections to expect in future. Next week's sessions. Okay, I see that is moving along. So we've then had today's session with a probe audit. Next week on Wednesday, we have Caseware Cloud, which will then talk about how do we use Cloud Sync, how do we use Smart Sync. So if your firm uses Sync at all, then that is definitely a session not to be missed. Financial statements, the audit report, and the review management, that's also a session not to miss. And then next Friday, we're talking stock count attendance. And that's specifically done now in February because we know you're going to do a lot of stock counts probably for a lot of clients. That's going to happen now at the end of February. Okay, so just be aware of that. Make sure that you've got that also, that you are ready for that to attend in that regard. Let me just in the chat then also include the feedback form. I would really, really appreciate it if you would please go and complete the feedback form to give us feedback on today's session or generally, yeah, and then even if there's other stuff that we can also complete. Right, then just also to give you some extra information, please join the LinkedIn pages. So the company Caseware Africa has a LinkedIn page, of course, and then there's a special LinkedIn page for Get Ahead Audit Intake, where we will be possibly sharing some tips where you can chat to each other and things like that. So you're welcome to connect with us on LinkedIn there, and also on YouTube, Facebook, Twitter, as you need to. There's a lot of videos uploaded to Twitter, so you can definitely also find a lot of value from that. And that's basically the last of what I had to say. Other than that, just thank you for your attendance. Thank you for all of your participation. I've definitely had a lot of fun today, and I hope you did too. And I'm already looking forward to your future attendance for the other sessions. I won't be presenting next week's audit session myself. My colleague Helen Miller is going to attend that, but I will be presenting the next audit one, I think, which is on the 8th of March, when we deal with cash and cash equivalents. All right, so thank you very much. I do see one or two of the questions, which I'll be responding to individually, but otherwise, thank you for your attendance. I hope you have a fantastic rest of your Friday. And in case you were getting a little bit jealous, I won't be spending my sunset evening on Table Mountain, so don't worry. If you're not in Cape Town, you're not going to miss out, it's not that I'm going to have a better sunset than you are. You might be having a better one than I am, but yeah, enjoy, and maybe one day we'll meet on Table Mountain. I don't know. All right, to end off this Get Ahead series, what do you say? We go and we take a trip in the most efficient way to get to our desired audit risk. All right, have a fantastic Friday, and I'm already looking forward to seeing you on the future webinars. Goodbye.